How will markets react this week following the president's plan to put a 25% tariff on up to $50 billion of Chinese goods? A decision in response to alleged intellectual property theft by China. U.S. Trade Representative Robert Lighthizer saying, quote, "Technology and innovation are America's greatest economic assets, and President Trump rightfully recognizes that if we want our country to have a prosperous future, we must take a stand now to uphold fair trade and protect American competitiveness." Lighthizer saying the U.S. will impose a first set of tariffs on 818 items worth about $34 billion on July 6th. Separate measures worth about $16 billion could take effect following a review and public comment process. The White House also saying it's planning broad investment restrictions for China. Those are set to be announced by the end of the month. Beijing firing back, announcing plans to slap its own 25% retaliatory tariffs on U.S. products. On the list, U.S. soybeans, beef, orange juice, and whiskey. Those are set to go into effect on July 6th as well. China imports roughly 60% of all U.S. soybean exports, and it's Beijing's promise to retaliate that had commodity markets nervous on Friday, grains dipping in early trade before recovering.
So this appears to me to be a very classic buy the rumor, sell the fact scenario. The rumor here, of course, was that Trump would impose tariffs. The fact is that, in fact, he did. And upon that fact, we saw the markets rebound. So have we totally priced in a trade war? It's tough to say because I don't think the story's over yet. China may come back with some sort of retaliatory tariff. Whether or not it involves soybeans, we do not know. We've got other trade issues as well. We've got issues with Mexico. We've got NAFTA issues that are ongoing. We've got issues with the EU. So this trade dispute is not resolved. But for the moment, I think the market is trading as if we've priced a great deal of this in.
Vaclavic says now that China has released its own set of retaliatory tariffs, markets could drop this week. China's Ministry of Commerce saying in recent weeks, the U.S. and China had made progress on a deal that involves additional purchases of U.S. ag goods. The Chinese say that offer is now invalid. The nonprofit group Farmers for Free Trade saying the administration's move to add additional tariffs on China is, quote, downright scary.
The farm community might be willing to take a black eye. They're not willing to take a broken arm. And it really comes down to how much damage is going to get done. And this is now real damage is being done to U.S. agriculture.
Keel says this situation is frightening for all U.S. farmers, and he believes this is a trade war. The ag industry banding together seeking help for these recent trade disputes. Soybean, corn, wheat growers, equipment manufacturers among those asking members of Congress for last-minute help to push back against the administration's plan to impose those tariffs. Meanwhile, the USDA saying it continues to talk about a stopgap program, money set aside to help producers hit by the tariff decision.
We continue to look for those opportunities down the road to understand how they've been impacted by these negotiations and if there's a role for USDA to play in working together with them. Both the Secretary and the President have said that they want to work to mitigate the impact that these negotiations have on agriculture.
And USDA is involved in those talks?
Yes, USDA is very much involved in those talks on a daily basis.